The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
You know, it's always an interesting conversation when we invite our aggressive growth strategist, Brian Boland, to talk about a couple of stocks that he feels are important. Today, probably not going to be any exception to that rule.
Always a crazy pick, coming from me. The aggressive growth tends to find, crazy names. And, I haven't had a good theme lately when putting together. We used to have good themes.
Yeah.
A couple stocks and industries. So.
Well, this first company you're going to talk about, ticker KLIC. I don't even know how to pronounce this company.
Yeah, Kulicke and Soffa.
Whatever.
And I was really bad in phonics when I grew up. I was always getting PHs when I should have got Fs.
Okay. Okay.
But this stock has a couple of A's. A's for growth, an A for growth, and an A for momentum, and a VGM. So when you average them all out, it's an A. But most importantly, it's a Zacks rank #1 strong buy. Kulicke and Soffa is the semiconductor capital equipment stock, and that means that they make the tools that make the semiconductors.
I see.
So, that it's a very interesting space. The semiconductors are very popular, but they need these big machines to be ordered well in advance of the new chips that come out. So that's why this stock is kind of interesting, because the chip stocks have run, but as we can see here from the chart very recently, the stock for this one has really risen here. There was a recent earnings event, so we'll get to that in a minute, but we can see from this big move from just under 20 to 23, that sounds like 15% if my math is right, 20 to 23.
Okay.
Sounds good, right? So when you have that type of movement, that bodes well for the chip stocks as well. So if we take a look at the earnings estimates here and why it's a rank 1, we see it moving from $1.07 to $1.29 over the last 90 days. Next year looking good as well, with it moving from $1.15 to $1.25. And we can see those beats that I was talking about here on this page. The last 4 reports have all been big beats, with the average being 38% positive earnings surprise. And when we stretch that out onto the price and consensus chart, we can see that it's actually been 6 beats in a row, all of them pretty good. The stock moving up substantially, earnings estimates moving up as well, but not really up to the pace of the estimates right now.
All right. This other company, Intevac, we describe it as a company that supplies static sputtering systems. What the heck does that mean?
Well, from someone who sputters for a living.
Well, that's why I asked.
This is talking just about the components that make up a hard disk drive.
I see. Okay.
So when you hear that zzz, zzz, zzz,
okay.
Maybe you might have heard that back in the day with those older ones.
Yeah,
or,
right before my machine failed.
Right, when you put in that 5 1/4 inch disc into your Apple IIe, and you would hear it go, That's the sputtering, right?
Got it.
So this one is a Zacks rank #1 strong buy, as almost all of our rank buy videos are stocks. So it has a growth style score of A and a value style score of F. And you know that I love to see that divergence there of those two things, but you're going to see why it's that F. It has a 100 and round it down to 113 times forward multiple. So that's pretty rich.
That's interesting too.
That's why those value investors are getting out of the way. But when you have growth, you don't need to be value. And this stock has had growth. We can see over the last few months there that the stock's just nice looking chart there, 10 to 12. That's a 20% move. We can see the earnings estimates have moved up from 7 cents 7 days ago to 11 cents right now. 22 cents for next year, moving up to 35 cents. That's a big jump, and a very large implied earnings growth rate there of more than 300%. Could triple. This 11 cents could triple, and it's still not 35 cents. We can see the earnings estimates. The beats have come in very strong here. 72% average positive surprise over the last year, and when we stretch out that map or that chart, we can see that there have been map. That's how I like to think of these charts, Terry.
It's always fun to watch you get lost in your thoughts.
Right.
Let me tell you.
I confuse even myself almost all the time. But we can see the big gaps here between the spaces of the lines. That's the implied earnings growth. So we can see that it is really big here. So as that line moves up, it has dragged that stock price up, especially when you have a nice history of beats, which we can go back to 2015, which was the last time it missed, but is just been doing very well here. This used to be a stock in the portfolio of stocks under 10, but I sold it prematurely as it went from, I think, around 8 to about 10. I was a little bit worried about earnings not too long ago. Got out, but had a very good gain in it. Obviously, the stock is still moving higher. Something to keep on your radar screen.
All right. Besides that, do you own these?
I do not.
All right. Thank you for that informative interlude.
Maps, charts.
Whatever.
What, right?
See, I told you, no exception this time. In the meantime, in between these fun little conversations with Brian, you can always check out more stock information on our website, zacks.com. Get over to the homepage. You can link to stock picks, stock picking strategies, commentary, and more right from there with Brian. I'm Terry Ruffalo.